Let's have a look at this and see which way they have gone. There we go, 3.85%, a cut of 0.25%, as has been predicted. It was a 99% chance, according to money markets, that there would be a cut of 0.25% like that today. It's taken place. We'll get more of the reasons as they come forward. The reason why this has been so universally accepted is because of inflation coming down into the target band from the Reserve Bank. But one important element, one important addition on top of this decision today will be the latest statement of monetary policy. So these are the latest economic forecasts that are coming in from the Reserve Bank. It means that as inflation is now moderating in Australia, so too are the interest rates. Now, though during the whole tariff sort of debate that was going on, the turmoil in world markets, there was at one stage a prediction there would be 5 rate cuts in Australia from here. Now that is moderated. Markets are now expecting just 2 more after this one today. So in total, 4 rate cuts for this year, February, now in May, another one in August, and then in December is what money markets are suggesting will take place. The other point also is just having a look through where the Reserve Bank is today and the reason why they have basically done this. Effectively, what they're saying today is that the reasons are about inflation. They're looking very much at where inflation is and where that goes to. But the second thing also is to have a look and see what they look for the future. And the reason why that's so important is because the Reserve Bank, quite clearly, I think, is likely to be a little bit more, sort of relaxed about where it goes in the future, basically not promising further rate cuts into the future. So this is pretty important for them. Just trying to find that media release right now. Here it is. Their monetary policy decision. Go to the very bottom of that, and that will give us the reason. Effectively, the board will be attentive to the data and evolving assessment of risks to guide its decisions. In doing so, it will pay close attention to developments in the global economy and financial markets, trends in domestic demand, and outlook for inflation and the labour market. In other words, they're saying still that maintaining low and stable inflation is their priority. We know that. That's a given. But the second part about this is that they are going to continue to watch if there's any outbreaks of inflation in Australia's economy. Just one quick one for you. Let's have a little bit of a look, if we can, at the money markets, just to see where money market interest rates now, dollar, have gone off the back of this. Look at that, a little spike. So the money markets, not in a big way, but in a very small way, are effectively saying the ASX 200, more rate cuts coming. Then you start to see a little bit of a drop in the 1-year bond yield. That effectively says, yep, you can pencil in more rate cuts coming later this year. Have a look at the Aussie dollar. The Aussie dollar should be a touch lower. It is. And that, again, all is pointing to the fact that money markets are now expecting these rate rises later this year are pretty much cemented in.
Ross Greenwood with that breaking news, 3.85%, a cut of 0.25% as expected.